we're going to go over order blocks and imbalances. So order blocks are finding the base of strong moves, the real areas where smart money steps in. Imbalances is just understanding gaps where price move too fast, meaning a manipulated move either up or down. So this is a cheat code I want you guys to remember. Whenever there's an imbalance, there's going to be an order block and there's going to be a high that calls the shift to the downside, and same for the the up move, right? So if you have an imbalance from the down move, then it's going to form a new low that broke above a high, right? So let's see if we can see a good example of this, right? So let's go see if we can find some order blocks here, and then we can get started on this. So if we're stuck on the 4 hour here, if we look at the 4 hour, right, we already know our highs and lows, so we can remove this real quick. And then we're going to do it all again to show you guys just steps by step. So we'll start off on the weekly again, right? Weekly. This here is our previous week low, so we can just label it right here. Previous week low. Hold on, is that my previous week low? Nah, my previous week low is lower. Yeah, sorry, that is my previous week low, and this is my inside weekly low. That's what I was mistaken with. So this is my inside weekly low, right? And then this is my previous week low right here. All right, cool. So we got that, and then we can mark up our previous week high. So previous week high, boom. Okay, cool. So let's go to the daily real quick. On the daily, let's remove these alerts to not confuse you guys. So if we go straight off the daily here, right, we should see a rejection of this imbalance here. So just to kind of show you guys, let me just refresh it, see if it deletes those alerts so it's not confusing for you guys. Okay, so if you guys look at the daily, right, from our highs and lows, remember we have a new high, we follow it backwards. This was our low. We broke below the low, so like I said in the very beginning of this video, if you have an imbalance, you're going to have a structure shift. You're going to have a new high. So in this situation here, you have this 4 hour high here, right? Which is what? Your order block. So your order block is going to be off of 3 candles. So it's going to be in this situation, if it's a structure shift to the downside, you're going to have a bearish order block. It's going to be the up move that created the manipulated move, meaning that created the gap to the downside. So this here is your imbalance. So if you picture, like a gap, let's say if you're driving down the road, there's a pothole, right? That eventually, the city eventually has to come and fill that, right, for safety hazards and stuff like that. So same thing here with the market. If you have a gap, it's essentially you have a hole in the market that the market needs to come at some point and come fill it. Does it have to happen the same day, same moment? No, we just never know when it's going to happen, right? But it did fill it up here, and then your order block is pretty much the high here from the high to the low of this candle. The imbalance is from the big body and the next wick of the next candle here, right? So your order block essentially is pretty much like the last line of defense, right? Now, why is that? Because if it gets up to the high of the order block, what does that tell you? That tells you that that's going to try to go for a structure shift on the 4 hour here, correct? So that's a 4 hour order block. As you guys can see, we stayed below, we reject it. Okay, sorry, that was the daily one. We're on the daily chart, not 4 hour. Your 4 hour one, we're gonna break it down, right? Smaller. So your 4 hour, now we're refining it down, so meaning we're just gonna break it down to a smaller time frame. So if I can grab this here, this is your 4 hour order block. Let's see if I can find it here. Dun, dun, dun. The last up move that created a break to the downside, right, on the 4 hour as well. Last up move that created a break of these lows here, as you guys can see, follow it backwards. That's your high. So this is actually the daily high. Sorry. So this is your daily high. And this previous week high is the same thing as your 4 hour high here. So this is your previous week high and your 4 hour high. So as you guys see, like I said, the high of the order block is the last line of defense. As you guys see, we never got above it, right? So we didn't get above it here, which is pretty good, and that's why we were rejected. Okay, cool. So now let's see the trend to the downside. So rejection, we had to break up these lows here, right? We broke this low here and this area here, and then we continue lower to the new low, pushed up. This high here caused the break of this low to continue the trend down. So what did that low form for us? We're going to follow the break back up. What forms after a break, guys? You're always going to have an imbalanced order block. So all these gaps are your imbalances. So this is your imbalance that we rejected today. So this is your 4-hour imbalance that if you guys watched the overview, I said we'd come up in here, look for rejection, which we did. So this here is our 4-hour imbalance, right? So we're gonna type that in, 4-hour imbalance, and then this here is our 4-hour order block, right? The last up move that created the break to the downside, right? So this here is our 4-hour OB, right? And then we can mark this up as our 4-hour high up here because that's the last up move that created the break to the downside. So we know where our 4-hour high is. If we break above this high here, then the market is going to try to go to the next high, which is the previous week high here. As you guys can see, we rejected the last line of defense here and then push right back down. Okay, so now let's go ahead and look the chart a little bit more. So let's actually fix this because this should be previous week low. Right, okay. So now let's go to the 1 hour and see what's going on here in the 1 hour. Okay, so on the 1 hour, we bounced off the inside weekly, right? This was our last high that caused a shift to the downside here. So we went back bullish on the hourly. So we went bullish. We know that this was our low here on the 1 hour, right? This is the last down move that created the break above these highs with this candle. So follow that backwards. That down there is our 1 hour low, right? Our 1 hour low. Okay, cool. So now let's see if we can find an order block within that low. Because what forms after a market structure shift, guys? You're always going to have an order block and an imbalance form. It's either going to be in a larger time frame or a small time frame, but there's always going to be an order block and imbalance form. When breaks happen, it's with strong moves. So when those strong moves happens, they usually leave gaps behind because they manipulate a move, right? So this here is our 1 hour order block, right? So we'll mark this up here as our 1 hour bullish order block. Okay, let's follow it. Okay, we pushed up, we pushed down, and then we broke back above, right? We broke back above here. So we know we have a new range, we have new lows. So this is a new 1 hour low down here. So 1 hour low in this area here, right? Okay, and we pushed up and then pushed down, and then we continued to push up above again, and we shifted back down on the hourly on this bullish break of structure to the upside. We shifted back down. So what formed after the break? A manipulated move, which is your imbalance here, right? So now that we know, we can remove this 4-hour imbalance, and then we know we have what, an hourly order block here, right? This here is our 1 hour bearish order block. Why is that my order block? It's the gap between that candle and the candle that caused the break, which is this one, and the third candle. An order block is going to be formed off of 3 candles. The up move that causes the break, the second candle is the candle that created that the break happened with, and then the third candle is just the last down move that's going to give you the push back up to retest. So we know that this here is our 1 hour order block, right? So we'll mark that up as our 1 hour order block. And like I said, our high is this 1 hour here. So now we know on the 1 hour, we're bearish unless we break above that 1 hour high, right? So we have that. If that 1 hour high breaks, we continue to the 4 hour. Okay, now if we do end up breaking above this high here, let's say we break above and then come down and retest, this here will be a bullish break, and then this here will be your order block, a bullish order block, right? Because then now you have the down move that's going to create the break, and then you're going to have the imbalance, which is the gap here, and then the low, which is the order block that created the market structure shift to the upside. So let's go ahead and delete this, and let's just go ahead and go back to the 4 hour real quick to see something. So we know that the 4 hour down here from inside weekly, we pushed up, came down, and pushed up. As you guys can see on this 4 hour zone, now that we broke above the high, the 4 hour internally is bullish, right? But what is here? Most importantly, this is your 4 hour order block that held. So your 4 hour bullish order block, right? So this is your 4 hour order block. So instead of labeling this as my 1 hour low, I'm going to label this as my 4 hour low as a larger time frame. I want to see a big break here. If this low breaks here, then we look to continuation to the downside to this next low here, right? So this is your order block. Why? What form? How does an order block form? After a market structure shift. This was your market structure shift here. Follow it backwards to the last down move that created a manipulated up move that left a gap behind. So what happens with those gaps? They come and fill them. So what did it do at the end of the day? It came to fill that gap, to push up into what in this scenario now? It came down to push up into the 1 hour structure to the downside. So this is just essentially a retest on the 1 hour to potentially now reject to now cause the 4 hour break to the downside of this low here. Does that make sense? Do you see how you plug in your highs and your lows, plug in with your market structure shifts, and plugs in your order block? So this is why step 1 was highs and lows, step 2 was identifying the market structure shift, and step 3 was your order blocks, because it all comes together at the end of it. It's just super easy to see and simple to see. So that's how you're able to see, okay, what does the market want to do? We never know 100%, but we can think and we can have a prediction, right? And we can see the possibility of that happening whenever you look for reaction of the levels or the areas you have marked up. So for me, right, we had like the range in this scenario here, for me, it's from this high to this low here. That is currently my range right now of the market. Breaks above this high, we continue higher. It rejects here. So let's say it rejects, let's go 15 minutes all the way down there. Okay, let's say it rejects, let's just delete that. Let's say it rejects here, and then the 5 minute didn't break above. Let's say if we were to break above this high here, right? Let's say we had a break above. Okay, then we know that this is going to be our low that we need to break to continue to the downside, because that's going to be our order block, right? You guys can see the down move that creates a gap that will create a market structure shift if it was to break above. I can't draw that because it hasn't happened. I don't like predicting. I want to wait for it. So if I'm going to look for rejection here, we saw that the 15 minute did close above, the 30 minute close above, the hourly hasn't. So if the hourly is still intact to push down to the 4 hour lows off this order block here, we want to see a market structure shift to the downside on the smaller time frames. So order blocks are pretty simple to see. Like I said, it's just following the market structure and then following where the break happened. It's like for instance, if we broke the lows, then you follow it back up, right? And find a high, it's gonna have your order block. If we broke above the highs, you follow it back down and you find a down move that's gonna be your order block that created a gap to push the market structure to the upside, right? So very simple here, but let's see, this is pretty much the chart here. And then on the daily, I'm actually going to teach you guys this inside daily that we have here on another class. But that is pretty much the order blocks and very simple to see. Let's see if we can see it on the smaller time frame as well, just to kind of teach you guys one more time. So, okay, cool. Here, so for instance here, right? You guys see that we pushed up. We pushed up above that high, right? We pushed up above the high, which is our 4 hour high, but on a smaller time frame, we broke above, right? So you can look for a retest to go long, and your risk will be the low here, right? Now, if this low was to break here, you look for the downside, right? Because why? The 1 hour is still bearish and the 4 hour is still bearish. So this is just all retest on the larger time frame. So you would want to wait for your small time frame to match with it, because what time frames works as a domino effect. So where is your order block here potentially on the upside? It's right here, right? They see the down move that created the gaps of these candles here. So let's see what happens to the market. Okay, so we broke below, right? So we broke below, but we swept the liquidity, right? We swept the highs, we swept the liquidity. So this here now, this order block, this failed order block should now act as resistance. Old support should act as new resistance. Pretty much, it's a breaker. So right, we broke the lows. So you can draw your fibs from the high to the low. You can wait for a retest with 50% and short it. Let's see what happened. See if we got that. Boom. All right. Boom. Okay. And you move it to your new low, which is this one right here, right? Move it to a new low. It hit the 50% and then reject it. Okay. So what does it form on these areas here, right? Your order block is going to be the high that creates the gap. So this is your order block here. And like I said, you could still use this breaker. We never got above the breaker and we just continue to the downside, right? And how can you play that off the order block? So very simple here. let me go ahead and just hide the drawing so it's not too confusing. So in this scenario here, this was your low. This was your low that had to hold, right? What happened? It broke. So what forms after a break? What does it leave behind, guys? An imbalance in an order block. It left the gaps, which is your imbalance, and it left your order block right here. So your risk would have been this high, and you would have took it down to come and sweep these lows here, and it did. Now that it broke these lows here, what did it form? Another order block. Okay, so the up move that created the gap of the 3 candles there, it should reject there. It shouldn't get above, and if it does get above, then it's failed on the 1 minute, right? And it rejected, boom, and your TP1 hit there, right? Okay, again, rinse and repeat. It broke below the low here, right? If it breaks the lows, it forms a what? Order block and gap. So if it doesn't form a gap or an order block, guys, it's a less confidence trade. But here, it left your gap, came to fill the gap, right? You want to make sure on trend days they leave no gaps unfilled left behind, right? So it came to fill the gap, and then it rejected right back down. Do you guys see how the order blocks work? Very, very, very simple and straightforward. And that's pretty much it for the order blocks, guys. There's nothing complicated about it. Another example here, right? We broke below the low. The trend is bearish. What did it leave behind? A gap and an order block. The order block's right here. And that's the up move that created the break and the gap here. And then what? It rejected. Okay, what happened here? Again, one more time. This was your low. It broke that. Okay, this is your high. It left the gap. So what should you want to see happen? Come and fill that gap and reject. And this one failed. This one closed above. So now the market structure shifted back bullish on the 1 minute, right? Let's go see on the 5 minutes. So now if it's bullish on the 1 minute, you want to wait to see if it's going to go bullish on the 5 minute as well, right? Boom, boom, boom. Yeah, look, see from that structure shift on the 1 minute there that we were talking about right here, what did it form? So if it broke above the high, what's it going to leave behind? A structure shifted to the upside. You're going to have an imbalance. You're going to have an order block formed here. So your risk to reward would have been entry around here, and your risk would have been that low, and then just pushed up, right? And it continued to break above again. Never broke below the low, right? It broke above the highs here again. Where? Right here. Okay, this is the high that broke that. What did it form? An order block and a gap. And what did it do? Continue higher. Okay, right? Once again, same thing. This is your high. We broke above, left a gap. Okay, new high here, came down, created an order block. So that should be support. Came and tapped the gaps. Boom, continue higher. Broke above the highs, created a new order block. Boom, higher. Right? You guys see how it all just kind of plugs in together.